This is TV18. And you're watching CNBC TV18.
Hello and welcome to the CNBC TV18 conversation on the road ahead for the Indian IT sector. We're back here again at the NASSCOM Leadership Summit. This is the 10th year that CNBC TV18 has been bringing you takeaways from the NASSCOM Leadership Summit on what the road ahead for the IT sector could look like. Now, we've already got the forecast that's come in from NASSCOM. FY16 growth guidance between 12 to 14% in constant currency terms at between $110 to $112 billion. In FY15, delivered about 13.1% in constant currency terms. Now, just to put things in perspective, the industry has failed to achieve the upper end of NASSCOM's guidance for the last 4 years. So that's going to be one of the questions that I'm going to put to my panel. Should we have a more conservative guidance perhaps as we go forward? But to answer all of those questions, joining us, the confusing part of my panel, R. Chandrasekaran from Cognizant and R. Chandrasekhar from NASSCOM. This is going to be a tough one. And Naushir Kaka from McKinsey and Dinesh Malkani from Cisco. Gentlemen, appreciate you joining us. Let me start by asking you that question, sir, about the road ahead and the guidance that NASSCOM is holding out. 4 years on a trot, haven't been able to meet the upper end of the guidance. Is it time now to perhaps be even more tempered? You've already put out a fairly muted guidance. It's the same pretty much as last time around. Maybe time to do a bit more sort of reality check, be more conservative then?
I think the whole idea of a band is to reflect the expectations, both in terms of what the industry expects to achieve as well as the environment in which we are operating. And in a sense, you're right that there are many factors operating globally in terms of what's happening in different geographies, what's happening in Europe, for example, where there are certain kinds of difficulties, what's happening in an economy like Japan, for example, where there are other kinds of problems. And then the whole business of currency fluctuations, which is yet another dimension to this thing. So this volatility and unpredictability certainly makes the job quite difficult. But what's interesting is that over these years, irrespective of the band, let's leave the band for a moment, but the actual number has been fairly constant, which means that in the middle of all of this turbulence, there has been a fair degree of constancy about the rate of growth. So the band reflects the fact that there is a slightly higher aspiration and an expectation. But then some of these factors perhaps do stand in the way of achieving the higher end. But we don't expect this turbulence to last forever. We don't expect oil prices to halve every 2 years. So, you know, we'll have to see how this goes.
I'll talk to you about the demand environment in just a bit. You know, beating this guidance is not an issue as far as Cognizant is concerned. You've had another very strong quarter. But Europe was something that everyone within the conference is talking about that continues to be the big pain point, whether it's Wipro, it's Infosys. Most companies feel that that is an area of concern and is likely to continue to be an area of concern in this fiscal. What worries you besides Europe today?
Actually, overall, if you really look at it, the demand environment is quite good. You know, the U.S. economy is doing well. The emerging economies, particularly the APAC, is doing extremely well, and our business is growing. Europe is actually a long-term bet. You know, you will see the lumpiness in demand. Some quarters it may be good, some quarters it may not be good, but it's a long-term play. The pressure points that the European corporations face is no different from what the other corporations around the globe face. So, so Europe is going to be a long-term bet, but the way you need to service the European market also needs a different strategy and approach, because you need to have a lot more local presence because of the language issues, culture issues. So how do you service the European market is going to be very different. So I think organizations need to adapt themselves to service different markets.
But do you see FY16 being significantly better than FY15?
We see, yeah, definitely. You know, it varies from company to company, but overall, from an industry point of view, we see the demand environment to be
And specifically from a Cognizant point of view?
Yeah, we expect...
How much more can you better what you've already been able to deliver in the last fiscal?
From a Cognizant point of view, we have guided to 19% growth for our financial year. So definitely we expect better results because we won significant number of large deals during the course of FY14 and all those deals are expected to ramp up during 2015. So we expect our revenue to be better.
Okay, I'll come back on deals in just a bit, but Noshri, let's talk about the year ahead. And we've just heard a comment coming in saying that this FY16 is probably going to look better, at least for specific companies in comparison to FY15. Near-term growth will continue to be driven by traditional businesses. IMS is not going anywhere despite all the talk of digital and so on and so forth.
No, I think firstly, Shireen, it's nice to note that we say 12 to 14% is muted guidance. I don't think there's many countries, industries or sectors which will ever say that, but we're happy to take that tag. I think what Chandra said exactly is right, which is the demand environment appears to be reasonably strong. But I think there, as you look 3 to 4 years out, I think what we see clients doing very much is they're shifting budgets. They are shifting budgets from what we would call traditional legacy type investments and applications towards much more, whether you take digital, cybersecurity, IoT kind of investments. And as that transition occurs, you'll see movement of budgets and therefore different companies showing different growth rates depending on which budget they're catering to. So I think that level of uncertainty continues, but underneath that all, technology is still proving to be the single greatest lever of productivity, whether you take the US or you take India as well. So I think you can bet on the fact that this industry will continue to show robust growth.
Dinesh, let's talk about India before we talk about the rest of the world. And how confident are you feeling, despite what the government is saying in terms of the objectives for Digital India and so on and so forth, domestic revenues in the domestic market, the size of the opportunity here, do you see that being significantly different compared to the conversations we've had around this area in the past?
So there are three things that I observe very closely, and the first is technology is becoming front and center and at the heart of transformation that businesses are going through. It's very hard for a business leader to sort of keep monitoring every trend, but the one thing that companies need to watch out for, be it any vertical, is when you wake up in the morning, it could be a completely different world. Somebody may have come in very fast, agile, connecting with their customers through completely different media and be able to cater to a much larger and faster marketplace, right? So that's the first thing, which is very encouraging, by the way. We've seen success in e-commerce that's driven it. We're seeing success in the transportation industry. So that's first. The second is, I also look at the tier 3 and tier 4 cities, and the adoption of IT has gone up there. We can sense the business moving very positively in that direction, which is very encouraging, by the way, because traditionally those sectors tend to be a little slower. And the third thing is, you look at the national agenda, right? Digital India is starting to pick up. There are obviously bits and pieces in which success has been demonstrated, but I look at this as a slightly longer term journey, but one that will encourage, when we go from 300 million connected internet users to 525 in the next 3 years, look at the opportunity for businesses to use that to go out and promote themselves. I personally feel pretty optimistic about
So what is it going to mean specifically for somebody like you? For Cisco, what would it mean?
So I think when businesses or countries think about digitizing, it means you need more networks, right? Because obviously the flow of data is very high. You need security, you need data centers, you need to have wireless. Those are all opportunities for companies like ourselves. And obviously the broader ecosystem. We have a fantastic startup ecosystem coming up in India now that will innovate on top of the infrastructure that companies are building, right? So it's an evolution of large companies playing in mega projects and then the startups building applications and sort of things that will drive end-user behavior.
Sure. But let me come back to you, Chandra, and looking at the commentary coming in from analysts who are tracking the sector, that while demand environment, as you pointed out, is looking strong, they do say that deal complexity is on the rise, and that is going to result in lumpiness in revenues. Would you agree with that?
I don't particularly agree with that, because now customers are really wanting us to take end-to-end responsibility. They are willing to sign long-term contracts. So, the deal cycle may take long time to close, but once it is closed, it's going to be over a longer period of time. So if over the next few years, if that gets streamlined, you're going to have a steady stream of revenue, but it's not going to be guaranteed, but you need to deliver against those SLAs that you are signing up for. So I don't see any lumpiness. There may be longer deal cycle, but as you sign more and more deals, you will have a steady stream of business.
What about this whole digital business? And, we've been talking about how this is the new buzzword and the dilemma that most companies are facing at this point in time in order to be able to cope with the changes that we're seeing. How are you coping with this, for instance, at Cognizant, and what is the kind of real opportunity that you're going to be able to capture within the space? Can you share a number with us? TCS, I believe, is looking at $5 billion from the digital space in a couple of years down the line. What would it mean for you, for instance?
One thing is for sure, I think everybody will vouch for this, digital is here to stay.
Yeah.
It is an increased opportunity. If you're not in the digital play, you're going to become very irrelevant very soon, right? So digital is very real. But if you ask me to put a number to this, it's going to be very difficult because digital is permeating everything that you do, right? So what is digital and what is not digital is going to be very hard to differentiate. But one thing I can say for sure is, if you really want to grow as a company, the share of digital revenue will outpace the growth of the company.
But will the deal sizes, for instance, be smaller in the digital space in comparison to the traditional businesses?
It's not likely, because once digital becomes mainstream, it's part of the overall end-to-end service that you're going to be delivering. So it's going to be embedded in whatever you are doing. So it's going to be very hard to differentiate what is digital and what is not digital.
Chandra doesn't have a number. I'm sure McKinsey has a number. Share that number for us, Naushir. I'm sure you're dying to.
Well, generally we have a number for most things, but Chandra is right. I think digital is harder to put a number down. If you look at let me say 6 technologies to be specific: the SMAC stack, IoT plus cybersecurity, everything around those 6 areas. They comprise today 10% of incremental spend. Okay, the incremental spend typically on an IT budget is about 30% of total spend.
Okay.
That's going to go to 80% in the next 5 to 7 years, right? So if you look at that share of the new technologies going up in the incremental spend base, it's certainly a very, very significant proportion. That's why both the arguments that I don't see digital in my numbers today, but I think it's such a hot thing, is both valid. What is actually true is that at least our first impression of digital is that it doesn't leave the same level of annuity spend as traditional technologies did. I mean, that is the promise of digital. So I think providers will have to work a lot harder in the future as the migration to digital happens, because it doesn't leave that much of a continuing revenue spend unless you become a platform provider yourself.
Wage inflation has been a concern. It will probably continue to be a growing concern, and attrition has been a concern and probably will continue to be a concern. How worried are you on both those counts as far as the industry is concerned?
I think that, one of the key implications of the kind of changes which Chandra and Naushir and Dinesh talked about is the fact that in the dramatic transformations that are taking place, there are 2 things which are very clear. The transformation is dramatic and the speed is incredible.
Are we ready for the dramatic transformation, the fast dramatic transformation that's taking place?
That's exactly the point. I'm saying, what is the hitch? The hurdle is whether we will be able to skill ourselves at the pace that is required to be able to actually drive the transformation. And we are not just talking about the skills needed by India or for India, but we are, at the end of the day, a supplier of this kind of skill for the whole world. So I think the biggest challenge is in making sure that the people who are entering the industry have the skills that they need. The people who are in the industry are continuously acquiring the skills that are needed at various levels. So today, irrespective of whether you're at the top or at the bottom, or you're just about to enter or you're at the middle, if you don't change your skills, then you are not relevant anymore. And I think that is the single biggest challenge, and how well we handle the skills issue actually will play an important part in determining.
How big a challenge is this going to be, Chandra? Wage inflation as well as attrition?
For the traditional services, there will be pressure on wage. But that's why, you need to really move towards an outcome-based engagement. So where you're guaranteeing certain business outcome, and all of us are talking to our customers in terms of moving to an outcome-based model. That way we can manage, we can control our destiny. So that shift you will see in the industry going forward. Second is reskilling is a constant investment. I don't think it is new, but it's happening more frequently. So that's a new reality that we all need to confront. And I'm sure with the focused effort, we can overcome that.
Let's also talk about the road ahead as far as M&A is concerned. Are we likely to see big ticket M&A? Are we likely to see a more string of pearls approach, which is what somebody like Cognizant has been following? Or is it going to be the sort of mega blockbuster M&A deals that we've seen in the past?
I'm sure you will see more and more M&A activities, because as companies are growing larger and larger, the complexity of services becoming more and more complex. We need a broad range of skills. We need access to various markets to continue to maintain the growth momentum. So I think M&As will become a reality. The ticket size of the M&A will depend on the company's strategy. We always were doing only the string of pearls type of acquisition, but last year we did the TriCet acquisition. We paid about $2.7 billion. So that was the last.
Are you going to go back to string of pearls, or are you going to go back to the? Or are you going to continue with the big ticket one?
Because that was the bet that we are playing on the healthcare segment. So it varies from company to company. So we'll continue to look for good acquisition.
Any big bet that you're making?
We continue to be in the market, sharing, but there's nothing that I can share today.
Now, Sher, are we likely to see these sort of niche sort of acquisitions being done by companies like Cognizant, or do you really see some mega consolidation happening as well?
I see both. I think the niche deals are very clear. And Shekhar spoke about it a little earlier, which is the speed of transformation is so high that frankly you can't afford to have an internal R&D, right? You have to go out and find partners who will actually accelerate your R&D process. At the same time, I think the disruption and the level of disruption is so high that you will start seeing more and more big ticket M&A. I think people are getting comfortable with the fact that you
outbound?
Both outbound and inbound. Both. Because I actually think that people are getting comfortable with their capability, and potentially India does continue to be a place where you can still get this scale and capability of technology talent. So I think inevitably you're going to be in a pretty hot market.
Okay.
One more point I would like to make. Increasingly I see an interest both for large companies and most of our customers. They all want to play a very active part in the India innovative ecosystem. They have actually set up separate fund to invest in some of these smaller startup companies from India. So that's going to be a big opportunity.
Everybody's doing that. Everybody's doing that. What about Cognizant? Have you put aside a certain amount of money that you would like to invest in startups?
Actually, we have been doing it for the last 3 years internally within Cognizant. Now we also look for opportunities where we can invest in some of these innovative startups outside too.
Since we are talking about startups, and I wanted to get all of your comments in, I mean, this is perhaps the best time for the Indian startup scene. It's global guys like Facebook and Twitter who are looking at the Indian startup ecosystem to actually do M&A. It's Indian tech companies who are looking to invest or partner or co-create within the Indian startup scene. How excited are you about the Indian startup space, and what more would we perhaps see happen in the year ahead?
So actually, from a Cisco standpoint, India was one of the first geographies we created a special fund to actually go out and invest in some of these startups, right? We put about $40 million down about 6 months ago, and we said, we'll go and look at companies that add value to the whole IoT ecosystem, to the whole mobility and cloud ecosystem. It's been very encouraging because some of the technology coming out of here is actually revolutionizing a few things around the world, right? And I think it's also related to the fact that as companies digitize, they are using IT in a much more strategic manner. It's not about keeping lights on anymore. I agree with Naushir said, 80% of it will go into that area. But then they want business solutions. And typically large engineering organizations are not great at producing specific vertical applications. They'll be very good at creating products. And then layered on top of that, when you want to have business solution, the startup ecosystem is the best one to go after because they get it, they go understand the business, and they're able to create that very fast. That's the strategy we are using. We build, and we also buy and invest. Sure.
Naushir, how big is this really going to be? He's talking about investing $40 million in the startup scene. Infosys has put together a fund of about $500 million. $250 will be invested only in Indian startups. Are we just at the tip of the iceberg, really, in that sense?
I think yes and no. I think, as always, you'll see the famous S-curve in most of these investments. So we're where there's no question. In the startup environment, we are in a bull market, right? It's a very, very strong market, and I think you'll see the investments continuing to grow. Underneath that, what is really interesting and exciting is that you're seeing a whole next generation of entrepreneurs. And that's really what is going to power this in the future. That's what I actually feel very happy about, because that level of entrepreneurs, it doesn't matter if that first startup fails or the second startup fails, right? You're seeing that bench strength being built, pretty much like if I go back 15 years, the IT services companies and the BPM companies built the bench strength on professional management of process at scale. So I think that's going to happen. But to be honest, is the party going to be as big as people seem to predict today?
No, you don't think so?
I don't know.
Would you agree? Do you think the party is going to be as big as people think? I mean, look at the valuations that these companies enjoy today.
I differ with No Sharon. I am very bullish on the startup ecosystem in India, and one is there is an urge amongst the youth of the country. Today, if you go to various campuses and talk to the students, they are more interested in talking about how is that they can do something on their own than what traditionally people have been doing, So there is an urge amongst the youth. They don't mind failing quickly.
Sure.
Right? So that itself will spur innovation for the country. But we need a lot more favorable ecosystem for them to be successful. So I'm very happy that the angel funding is on the rise. There are a lot of funding from VCs and PE firms in the startups ecosystem. Now NASSCOM, we are working with the government in terms of creating the favorable environment for them to make it easy for them to operate. So I feel this is an opportune moment where everything is coming together. There is a need for innovation from our customers. There is an urge amongst the youth to do something different. There is a realization with the government and the various associations to support this ecosystem. So I think everything is coming together nicely.
On that note, gentlemen, it's always a pleasure speaking with you here at the NASSCOM Leadership Summit. We hope that the Indian IT sector will continue to capitalize on the opportunities not just in the domestic market but also what's happening globally. We hope that when we return next year, we will have more color and more numbers to throw on the digital opportunity, which is lacking today. Many thanks to my panelists here for joining us here once again. On that note, it's time for us to wrap up the Cnbc TV 18 special. We'll see you again next year from the NASSCOM Leadership Summit. Till then, from the entire team, goodbye and many thanks for watching.